Welcome to this episode number 56 of Your Next Trade, called today NVIDIA Rally. So this week, as we flagged last Saturday, was all about the NVIDIA results. And those results did not disappoint. Actually, the stock went ballistic and went up 15% on the day. So that was after the close on Wednesday and on Thursday. NVIDIA went up 15% with the market capitalization above now 2 trillion and on the day up $277 billion. So overall, the market liked it very much, as we're going to see right now. So year-to-date asset performances, if you look at the most developed markets, we are talking Europe, US, Japan. So Europe and US are roughly up 7%. If you look at the S&P, the Nasdaq Composite, or the Euro Stoxx 50, Japan is up roughly 17% now. Some of the overperformance is explained by the Japanese yen, which is down 7%, 6% down on the year. So overall, dollar adjusted, we are talking plus 11%. But now, Japanese market is at the level that we haven't seen since 35 years ago. So a lot of appetite for stocks, lot of appetite for risk on with cryptocurrencies up 20%. But I'm interested in this week-to-date asset performance. As we can see, anything that is light blue except the Russell 2000, the reason is because you got an equal weight for this index. But if you look at the S&P, up 1.7%, interestingly, and something that we flagged, now actually tech through the Nasdaq Composite is a bit underperforming the overall market, which before, it was the leaders and that was really driving the market much higher. 2.2% for the Nikkei. Shanghai, China is up 3.7% on the week. Small up for the year. So after the new year now, China is recovering a bit. Currency not moving that much for the week. And finally, WTI is still trending around the 75-77%. So overall, if we look at the year-to-date industry performance, the picture is still the same. You get the S&P, very few sectors, industries that are outperforming the S&P. So the market is very much driven by very few names, and you can go into the next slide. Actually, what was interesting from this week is, despite having the S&P up 1.72%, you had many industries that were roughly up. So that was a broadened rally that was due to this NVIDIA result. So overall, if you look at Thursday, across sectors, across industries, and across countries, markets love those numbers. So it's really like a beta rally where everything went up almost, despite some of the industries that were a bit struggling. So we are talking here about single names that struggle both in terms of solar and cybersecurity. So Palo Networks struggled and was down 25% on the day after earnings. But overall, a massive rally for stocks. We are talking 2% on Thursday and Friday combined. If you look at the sector performance, as you can see now, it's pretty the same for most sectors where everything rallied. So it's not only an NVIDIA rally, it's a market rally. Everything has been going higher due to those good numbers. So a lot of inflows going into that space. If we look at rates, so that's something that we flagged last weekend. There has been a divergence between stocks and bonds. You remember from literally July to end of October, end of last year, bonds and stocks were moving the same. And we had a divergence that started at the end of January of 2024, start of February. The reason is pretty obvious. The big stocks, the Fabulous 7, which have been coming with good numbers for 3 or 4 of them. So that created a divergence between stocks and bonds. So if you look at the S&P versus the 10 years futures, you will see over the last weeks some divergence. So we are in a phase these days where the market, we are talking stocks, is very much on fire, going higher, and driven by this NVIDIA. If we look now at the 10 years of the US, 4.25%, so we are above this trading range at 3.8% to 4.2%. Inflation has been coming down a bit long run, but actually more recently we have seen some inflation coming up again. So through the CPI, we're going to have a big number this week with the PCE, which is the favorite number for the Fed. So that's something to be keeping an eye. Interestingly as well, we are now down 44 bips on the 10 versus the 2, so very well inverted yield curve. What about the Fed funds expectations to the Fed fund rates? So if you compare the 5.33 that we have these days versus June, so June we are talking 18 bips difference. So the first cut now that the market is pricing is around June or July. But as you can see, if you compare this 453 to this 533, that's 0.8%. So now the market is fully pricing 3 cuts for the Fed of 25 bits in 2024, which is exactly what the Fed was pricing to the dots in December last year. So we massively went down from a cut of 165 bips to now 0.8%, so not as much as accommodative as before. And in the meantime, the equity market stocks did very well, despite the Fed seeing as more hawkish. What about the VIX? VIX a bit down for the week, 13.75%, so below 14%. Now, the question mark is, will we see even more selling of volatility now that we had okay earnings? And if you look now at the VIX term structure and looking at October, what you start to see, and this is the spike that you have here, you start to see obviously a big event, which is the election, the presidential election in the US in October, November. So that is why you have like the earnings, when you get an earnings, you'll see the implied volatility going higher, and that's the same here for the October 2024. But as we know of the futures for October and November, for the VIX, this is why you see a higher VIX. So now jumping into technical analysis. So looking at the S&P, and I'm giving you here, as you can see, this is a weekly chart. So we are above the trending range, or the range that I've been outlining. So we are kind of overshooting. As I said last week, the divergence between bonds and stocks, when you get a bit of excitement, one of the ways to play it, especially when the implied volatility is low, that doesn't mean it can't go lower, is you can be doing put spreads. I'm not short through futures or the SPYs these days. I've been doing that in the past. I think, in a rally like this one, you never know when it's going to stop. If it can go to, it could stop at 5,200, 5,500. The reality, artificial intelligence, there are a lot of hopes. NVIDIA is driving the market. So if you want to protect your portfolio, if you want to have, downside protection, do some put spreads for the timing. That's my view only, as long as you don't have a catalyst. It's very risky to go naked short without having this catalyst. Nasdaq, interestingly, as I said, making some new highs, but not like, a nice move up. So a bit toppish. We looked at it last week. Some of the names look toppish. Nasdaq look toppish. Yes, in the meantime, we are up 2% on the S&P, which was a broader rally. But if you look at the leaders, and obviously the Nasdaq was made of a lot of leaders, it seems very, very toppish. So in between, you have another 2%. So saying that it's toppish when you have a 2% move is a bit of a joke. But I will be cautious, not putting too much long or reducing your exposure. Russell is the same. It's an equal weight index. So this is why we are not making new highs. If we look at now the Fabulous 7 versus the S&P, as you can see, the candle is pretty large. So that means pretty big versus the high and the low. So that means there is more volatility, which was explained obviously by NVIDIA, but there is a bit of indecision. I would like to jump now into the euro dollar. negative now. You see this candle. I sold some of my euros this week because I think it's going to be hard for the euro to go higher. Finally, NVIDIA, and this is the chart. Beautiful chart. I'm using here. So that will be, let's go into the logarithmic chart because the move has been so big that you need to be thinking in terms of percentage term and not in terms of dollar term. You see this trend, massive trend. Since we did the breakout at 500, we have been on a tier only green candle moving up and up and up. Interestingly, before the earnings, so we flagged on the community on Discord that there were tons of open interest at 800, and that was true on Wednesday, Thursday, and Friday, and the stock roughly closed around 800 on Friday. What does it tell you? Market is obviously driven by the quality of the bid, but in the meantime, it's still a market that is driven by options and where are the open interest. And one of the ways to do it, if you have a position in one stock, is to look at where are the biggest open interest, because if there is a big move, you can make sure that the stock will be moving towards this magnet, and this magnet for the NVIDIA was around 800. Finally, looking at Europe, so looking at the stock 600, so making new highs. Same with the DAX. So Europe has been very, very strong. I look at the earnings season. So actually, the sales have been pretty weak in Europe. Earnings not that great, but the market, across the world, we are talking Japan, US, and Europe, is moving like 1%. Correlation is 1. So look at US, look at Europe in USD terms, look at Japan in dollar terms, and you will see that over the last 12 months, all those three markets are moving roughly the same. So we are in a market where the correlation is 1. For the time being, this is risk on for stocks. So let's go back into the Excel spreadsheet, looking at what happened for the week, starting with the chart of the S&P, which is here. You see, we waited for the earnings. You get the NVIDIA announcement. We moved higher, and then we did like boom, boom, where you get the option expiry for the week. But big move on Thursday, and that was not only in the US, that was everywhere, where we moved by 2%, a lot of inflows. So a very strong market. We had as well the flash PMIs, where there is some confirmation that a bit of manufacturing bouncing. If we put aside Germany, for example, numbers are more or less the same for industry, for the industry and the services. Nothing really exciting. We are talking 1-2% growth, but really it is all about NVIDIA. So I'm giving you 3 charts for NVIDIA. So this one is looking at the left-hand side. We are looking at the last price of NVIDIA versus the EPS, and you can see the strong correlation versus between the two. So the stock is moving like the EPS for this year and for 2025. So you can argue that this is not necessarily a bubble. The question is not how NVIDIA will be doing in the next 12 months, because we do know that they are selling their hardware 50% to 50% of the new data centers. Why? Because they have the best products, they get the positioning, and they are making more than 20 billion sales every quarter. And on top of these 20 billion sales, because they have the best product and there is limited supply, what do they have is pricing power. So they're gonna have a 50% net margins, and that gives you those 10 billion plus free cash flow that you're gonna have in this quarter. This is your quarter, and which is expected for the next 4 quarters. So if you look at the free cash flow generation, if you take roughly 12 to 13 billion times 4, that gives you between 50 and 60 billions of free cash flow generation for the next 12 months versus a 2 trillion market cap or enterprise value. That gives you roughly a 3% free cash flow yield, which is not very far from what you have from the other fabulous 7, which are around 2% free cash flow yield. So valuation is not in a bubble camp. But the question is, when those data centers in 12 months, 18 months will be most of them will be built. Then you go from not necessarily having that much hardware. So the question, and if you listen to the call, clearly the NVIDIA CEO was pushing for the idea that NVIDIA is not only an hardware company, this is as well a software company. There are still some big question marks, because if that's not the case, then suddenly you don't sell 20 to 25 billion every quarter, and you don't have the same pricing power, because that will be surprising that over the next 12-18 months that no competitors will come. If you have a market that is growing the way it is growing with 50% on margins, you can make sure that new competitors will jump. Yes, there are barriers to entry, but it has to change. So next 12 months, due to the advance that NVIDIA does have, that explain going forward, 18 months, 24 months, big question mark for NVIDIA, which is for the time being a big cannibal in this market. So looking forward, looking at the catalyst, what we do have for this week, we do have on Thursday the PC. So this is the equivalent of the CPI, and this is the favorite data for the inflation from the Fed. We're gonna see, as like for the CPI, we do have like a bit of a jump. There are some concerns that inflation is coming back. The reason is still the same. We do have like a very active Biden administration in terms of fiscal expenditures, where the debt to GDP or the fiscal deficit is still running 5 to 7%. We have a US consumer that feels much better because the equity market is up 25% over the last 3 months, because the unemployment rate is below 4%, and very often you could see a second wave of inflation, and that could be the concern that come back for the market. So how the market has been reacting recently to the PCE day, actually the market has been kind of saying, I don't care about the PCE. Market was roughly moving between 0 to 0.5%. So not much. What about macro as well, because at the end macro will matter. So this is the ISM manufacturing versus the GDP. You see the divergence recently between the GDP growth, which was around 2 to 3%, and negative ISM manufacturing. Yes, it is explained by the destocking of companies that put a lot of stocks in 2021, 2022, and destock where the manufacturing was struggling. But if you believe in macro, at least we should see the GDP coming back to the average. So that's really something to keep an eye on. That is on Friday the 1st, the ISM manufacturing, the PMIs of this world. We do have like some bit of some auctions for bonds, 42 billion 7 years on Tuesday, and 64 on the 5 years. More recently, those auctions have not been going very well. And finally, something that I like to be looking at, which is the S&P weekly straddle. So that tells you by how much the equity market could be moving. 1.1%. Last week it was 1.2 or 1.3%, where actually the market moved by 2%. So we do see through implied volatility, when you start to see bigger move, not only the realized but the implied volatility moving a bit. So catalyst, macro mostly, and let's see. So this is the expected. As always, we could have some unexpected. So this is it for me for this week. Join us on the trading community. We discussed a lot about NVIDIA. We discussed about the open interest. We discussed about macro. There are 3 channels that are for free. For people that are more advanced, that either did the 4x4 video series or the mentoring, they will have access to more channels. And if you get any questions, you can send me an email.